Hi guys, welcome to this Money Control live stream. Good morning. I'm Nandita Khemka from the Money Control studios. Tuesday morning, it is the FNO expiry day as well on the Nifty, a weekly FNO expiry. So, brace for a lot of volatility given the fact that the currency market will be in focus. The rupee was in free fall yesterday, came very close to that 90 per dollar handle. Did pull back, but we saw a very sharp slide in the rupee, and that played spoilsport on the Lal Street as for Indian pharma, because this is the first time a drug application from an Indian drug maker has been accepted by the US FDA. So, work hard will continue to be in focus. In terms of foreign flows, the net sell again from the FI community, 1100 crore rupee worth of stocks sold in the cash market, but DI buying support continues. 2500 crore rupees worth of stocks were in the cash market. Put call ratio dropped to 0.89 vis-a-vis 1.14 in the previous session. And in terms of stocks in the futures and options band, no additions or deletions, but Saman Capital continues to be in the futures and options band. But on that note, bring on board our chartist for this morning, Ajit Mishra, Senior VP Research at Religare Broking, joining in. Ajit, lovely chatting with you this morning. Yesterday we hit a record high, and of course, by the end of the day, we really fizzled out. Managed to defend 26,150 on the downside. Almost, but what is it looking like? Would you see a resumption in rally? What are the next levels to watch out for? And of course, it's FNO expiry today, so should we brace in for a fair bit of volatility when it comes to the index movement?
Yeah, good morning, Nandita. So yes, it's been almost like 3 trading sessions that we are seeing market consolidating at the record highs. The tone looks positive. It's a healthy consolidation, means it's more of like, very narrow range consolidation. Yesterday, it was also a muted close. So it's normal, means as long as we are maintaining above 23,900 mark, which is the 20 days of exponential moving average, the overall tone looks positive. It's just that, after every up move, we usually see market witnessing bit of a consolidation or retracement. So this is something that currently we are experiencing. But at the same time, heavyweights across sectors, banking, IT, select stocks from the pharma. Then we have, metal counters also contributing in the move. So we expect more of stock-specific approach, which should dictate the trend. Today being the weekly expiry, 26,300, that will be the critical hurdle to watch out for. On the downside, in case there be any dip towards 26,100 mark, that's the area basically where you should look for long positions.
Okay, those are the levels for the Nifty, 25,300 on the upside, a crucial zone. Post that, of course, we can see a resumption in the rally. But Ajit, the Nifty Bank Index, would you say that we could retest those 60,000 mark on the upside? Because good traction we've seen the Nifty Bank and Nifty PSU Bank indices, both of them, leading this leg of the rally. Buy on dip approach remains on these two indices as well. And which are the stocks that you'll be watching out for from the banking universe?
So certainly, Nandita, banking has played a critical role in helping the index to retest the record highs. And despite the mixed trend that we are experiencing in the private banking majors, means HDFC, ICICI, they are still away from the record high. HDFC is very close to that mark, but at the same time, Axis, Kotak, this time around, they were the one basically who were dictating the market trend, and especially in the private banking space. PSUs are showing consistency in the trend, means SBI, after making testing a new milestone at 1,000, we are seeing a bit of a consolidation. But other PSUs named like Bank of Baroda, PNB, they are maintaining the overall positive tone. So it's kind of like a mixed texture within the banking space, but overall tone looks positive. Some consolidation after testing the 60,000 mark is completely normal. But in case if we see any dip, let's say towards 9,400 mark, that's the area basically where you should look for long trades, especially in the counters from the PSU banks, which are currently outperforming the private players.
Okay, those are the stocks, quite a few of them. But by the way, rupee is back at that 89.7 level. I think 89.78, that's a record low. So yes, after a close at 89.55, we are again seeing the rupee, hovering near the record lows. But just about 3 minutes to go for the markets to open. Ajit, would like to first get in your recommendations for our viewers before we talk about individual stocks.
Certainly. So from the PSU basket, Bank of Baroda is set for the next leg of the move post almost 3 weeks of consolidation. We are set for the next leg of recovery. The stock is already at the record high. So with stop at 289, one can accumulate Bank of Baroda at current levels with 310 as a target. Then from the pharma space, Glenmark is something that we like. After marginal retracement, base formation around the critical moving averages, and now we are seeing gradual recovery. So we expect this recovery to further strengthen. In 1880 should be a stop for this position for the positional target of 2070.
Okay, those were the recommendations coming in from Ajit. But Ajit, what do you make of the breakout move on Wokhard yesterday? That was the stock of the day, showstopper, you can call it. Of course, there was a development. It was reacting to that. I mentioned at the start of the show that the US FDA has accepted the new drug application for Zenic, which is a antibiotic, of course, first for an Indian pharma, landmark moment, but of course, we are still awaiting the approval for that. But nevertheless, the stock really took off. What's the strategy here? We have queries also coming in on what to do with the Wokhard after yesterday's move. Naveen wants to know your thoughts. How would you approach Wokhard after the breakout move yesterday?
So in fact, if you see Nanta, that stocks like Oro Pharma, Sun Pharma, Lupin, they were anyways witnessing decent traction. Yesterday, post news, Wokhard witnessed a very sharp recovery with volume. So this may result in further rebound towards 1570, 1580 area. So definitely you should stay put. Now 1390, 1380 is the zone basically where we have the immediate support. So one should not jump into a trade in case if we see any dip, let's say towards 1440, 1450 mark. That's the zone basically where one should look for long position with 1380 as a stop loss and 1570 as an immediate target.
All right, those are the targets on Wokhard, but let's take stock of the market open then. First ticks coming in, and as was being hinted or signaled by the GIFT Nifty, we are staring at a weak open. Bajaj Auto in the green, HUL, Power Grid. So yes, these are some of the names that are doing well. But let's talk about Bajaj Housing and Bajaj Finance, that block trade that has happened. I want to see what Bajaj Housing is doing. Bajaj Finance is trading in the green, but would you take a trade on any of these counters, Bajaj Housing and Bajaj Finance? Ajit, anything that's catching your attention?
So Bajaj Housing, it's a sharp decline, means almost 9% down. And in fact, we were seeing that the stock was struggling for quite some time, means it was very muted trade that the stock was experiencing. And after this breakdown, we need to see where we close today, means because the volumes are high. It's a block deal. So we need to see because we are at the record low. So in case if it sees any stability, then only you should look for any bottom fishing kind of opportunity. Bajaj Finance, on the other hand, has been maintaining a steady uptrend, still holding above 100 EMA mark. In fact, today is trying to reclaim 20 EMA. So we expect a bit of a consolidation, but as long as we are holding above 980 mark, definitely you can look to accumulate the stock at current levels with 1080, 1100 as a positional targets.
Okay, that's about Bajaj Finance and Bajaj Housing, of course, because of supply pressure. That stock is down somewhere around 8-9% or so. That block trade as well took place. Just a word on Indigo. It has gotten a penalty of 118 crores from the Joint Commissioner of Central Tax and Central Excise. I think, post its inclusion on the Nifty, it has seen uneven trade, so to say, Ajit. What are the next levels that you'll be watching out for on Indigo? Yesterday we had the ATF changes in prices as well. How is it looking like on the charts for an Indigo?
So Nanta, it's been almost 4 months now. The stock has been trading in this band 55.80 to 59.50. So we are currently closer to the middle of this band. Still holding above 100 EMA, which is definitely a positive sign. But yeah, the momentum is missing, and still we feel that this consolidation might continue for quite some time. So as of now, it should one should refrain from any fresh aggressive longs. In case if you have any existing position, 5700 should be your strict stop. closer to around 59.50, one should reevaluate.
Okay, that's a view on an Indigo. But let's talk about some of these auto names, particularly Hero Motocorp reported its sales figures post market hours beat expectations, as has been the case of with most of these auto names. Some of these names have done exceptionally well. Of course, since we're talking about Hero Motocorp, the stock is up 50% on a YTD basis. Uh, is it time to take some profits off the table when it comes to the likes of Hero Motocorp, or would you approach these stocks with a buy on dip lens? How would you look at these, and what's the preference here, two wheelers or four wheelers?
So yes, and that's a record high for Hero MotoCorp. Means with every passing day, we are seeing that the stock is maintaining this positive tone. And after almost like a year-long consolidation, we are seeing this kind of move unfolding. In fact, the auto index is also indicating the positive momentum to continue. But yes, after this recent surge from 5,200 to 6,300 now, there can be bit of consolidation or profit taking also. So for those who are holding short-term trades, definitely they can consider booking at least partial profit around current area and wait for any dip around 6,100 to 6,000 zone to re-enter fresh. Within the auto pack, Bajaj Auto, which has not participated yet, has formed a fresh base. So something maybe in a time horizon of a week or two, we may see a bit of a recovery or a rebound here also. 94.50, 9,500 positionally can be the area where one can maintain as a target, with 89.20 as a stop.
Okay, that's a view on the entire auto universe. You know what, let's focus in on shares of a Vodafone Idea as well. The stock is up 2.5% today. I just want to read out, take our viewers through what's the development here. Telecom Minister Jyotiraditya Scindia, in an exclusive interaction with our network channel CNBC TV 18, has said that the government is awaiting a formal request from Vodafone Idea before moving ahead on any relief measures. He also added that the Supreme Court judgment is recent and needs careful evaluation. He noted that the ministry is currently examining the legal boundaries set by the court. In fact, Scindia also indicated that the government may be able to complete its assessment and issue recommendations within a couple of weeks, with the relief package contours likely to be announced by year end. So yes, I mean that's one development that has come in as a positive one for the stock. But I want to get in your thoughts on how you're approaching this stock. It's a volatile stock, but the good part is that it's back in double digits. It's above that 10 rupee mark, and since mid August, Ajit, the stock is up in excess of 65%. Has the tide turned, and would you look for higher targets on a Vodafone Idea?
So yes, certainly this recovery has fueled speculation around a possible reversal. But as of now, still we feel that closer to around 11.5, the recent highs, where we have the long-term averages also placed on the weekly chart, is a zone basically which may continue to act as a strong hurdle. So as of now, fresh position is something that you should refrain. In case if you have any existing trade, 9 now should be your immediate base or support area or your stop loss. Once, let's say, we cross above 11.5 mark, then probably we can see this recovery extending towards 14 to 15 mark. But still, I feel that stock like Bharti Airtel is a better bet, especially if you are betting on telecom space.
Okay, Bharti Airtel is a better bet when compared to Vodafone Idea, but the stock has seen a phenomenal recovery since mid-August, 65% uptick, and of course, it's back above that 10 rupee level as well. But let's shift focus to our viewer queries then and try to take in as many as possible. I think let's take some leftover queries from yesterday first. There is a query on SBI. Let's get that addressed first. Komal Makecha wants to know, what are the right levels for a fresh entry in SBI for the long term? The stock is perched near about its 52-week highs of 999 or so. Is it a good time to buy, or would you wait for some dips to come by before getting in the stock and accumulating for the long term?
So for long term, Nanta, my recommendation to Kumal would be to wait because the last leg from roughly around 800 to 1000, it's almost a vertical rise, means there was hardly any pause or consolidation. So now we are seeing a bit of a breather after making a new milestone around 1000 mark. And 960 is basically where we have the immediate support. In case if it fails to hold this area, then probably we can see a dip towards 930. So 930, 900 zone is basically a good zone to watch out for the long-term accumulation. No doubt the overall trend looks positive. But yeah, the favorable risk to reward comes the moment we retest those key support areas.
Okay, that's the view. I hope that answers your query. But there's a query from Naveen on SRF that we are carrying forward from yesterday. He has holdings at I think 3,200. Wants to know whether he should hold or exit. He's making a loss here. The stock has seen uneven movements if you look at the 1 month, 6 month charts, but it did see some bit of spurt between the September to October period, right, 2-3 weeks. But that also fizzled out. If somebody is making a loss here, should they stick to it? Should they exit? Should they average? What should the strategy be?
So SRF looks range bound to me. Means it's been almost 9 months now that 2750, 3250 is broadly the range. Currently, after retesting the lower band, we are seeing a recovery. Good part is that the stock has already reclaimed the long-term averages. We are currently hovering around the same. 2950 is the immediate resistance. So in case if it manages to surpass the certain, then probably you can see his prices close to around 3050, 3100 first, and then around 3200 mark. So as of now, we should definitely stay put with 2800 as a stop loss.
Okay. Stay put with 2800 as the stop loss. Let's move on to our next query then. There's a query from Satya CK on Nalco. Wants to know, is it good to add this stock for the mid to long term? I think Nalco is one stock that a lot of experts have been recommending. Today as well, it's up somewhere around 1.5%, seen a good 12% up move. Should one ride this phase, or should one wait for dips, or should one, get into it right now itself? What is the advice?
So yes, metal as a pack. In fact, auto, banking, metals, they were among the top performing name from the key sectors wherein we are seeing consistency in the trend. Means the Nifty metal index is after marginal dip is witnessing recovery. National Aluminium is outperforming within the space. It's trading at the record highs. Off late, it has witnessed a marginal profit taking, but after retesting and inching closer to its short-term moving averages, we have seen a very strong rebound, and stock is again at the record high zone. So there could be some bit of consolidation, but the overall trend looks positive. So 250-55 is basically the zone where we have multiple supports. One should accumulate, not to invest in one go. So let's say in the range of 260-265 is something that one can accumulate with 255 as a stop loss. In the next swing, close to around 285, 290 is something that the stock might attempt.
Okay, that's the view. Hope that answers your query. There's a query on NCC as well. I'm not getting the person's name. I mean, would request everyone to write their names along with their queries. Holding NCC at 210, shall I average or exit? That's the query. Stock NCC stuck in a downtrend, no respite. In fact, it has come off, almost half from its 52-week highs, and this person here is making a loss. What's the advice? Should they exit or switch to some other stock, or should they average? Be patient. What's the call?
So NCC was trading in a very tight congestion zone, and post the breakdown below 204, 205 mark, we are seeing this gradual decline. Now we are closer to the last swing low, which the stock tested in the month of March around 166.65 area. So we are very close to that mark. So giving the benefit of doubt that we usually see these kinds of level acting as a crucial support. So 165 being the stop, you can definitely wait. In case if it manages to surpass 185 mark in during this recovery, then probably we can see a recovery towards 200, 205 levels. So as of now, it looks sideways to bearish, but yes, with 165 as a stop loss, one can continue to look for any rebound to exit the long positions.
Okay, use any rebound to exit the position. That's the call. Hope that answers your query. There's a query on Siemens Energy as well from Aisha. Wants to know the short-term levels here. Uh, the stock has been kind of sideways if you look at the last month or so. In fact, actually not really sideways. It has come off, some 7% or so in a matter of days, I think. So, how would you look at it? 5% down since mid-November. Any levels that you're watching out for here in the very short term?
So 3100, 3050 is basically the zone where we have marginal support, but overall it looks sideways to us. So as of now, the prudent strategy is to avoid any aggressive long. In case if you have an existing position, 3050 should be your strict stop.
Okay, that's a strict stop loss that has been mentioned on a Siemens Energy. Sorry, the chart that showed up was Siemens India. But let's focus in on a query on Apollo Hospital. Is it a good time to invest in this stock? Hospital stocks have been finding favor with a lot of analysts. Anything that's catching your attention, Apollo Hospital should do, or would you look at some smaller names?
In fact, we have had a phenomenal run. So now we are seeing profit taking across the board. So be it Apollo, Fortis, Narayana. So I feel that accumulation can be considered in Apollo from level close to around 7,600 mark, not at the current area, because since the stock has already slipped below its long-term averages, there could be a possibility of further correction towards the previous swing lows. So around 7,600 mark is definitely the zone where one can look to accumulate fresh. Overall, the trend looks positive, and on the higher side, 7,500 is going to be the major hurdle. The moment we cross, the stock will again witness fresh traction. Fortis is also very close to its support within this space, and we expect a bit of a recovery or a rebound trade. But again, we have better counters to trade in case if the view is short term. So if you are accumulating from the medium to long term perspective, then only you should consider hospital counters, otherwise avoid.
Okay, that's the view on the hospital stocks. I think that query was from Debu K. Hope that answers your query. I want to get in this query addressed, from Satvika. She wants to know your thoughts on Swiggy for the next 2 years. It's a longer time frame, but the stock, is in the throes of profit taking. If you see, some of these new age names did well, but they have come under some bit of profit taking off late. Of course, chartically, if you look at the movement, Eternal is way better in terms of where it's placed right now. But at 391, is Swiggy a better bet with a 2-year perspective?
So yeah, from the investment point of view, definitely one can consider accumulating. Means in the past also we saw that the stock attempted a strong recovery trend, but it couldn't sustain. Means we are again below the critical moving averages. So this indicates a possibility of further consolidation in the near future. But considering that the record highs were at 600 mark, and the moment, let's say, we surpass this 460, 480 hurdle again, we might see the next leg of the up move triggering. So this zone this correction can be considered as an accumulation opportunity with a medium to long term perspective.
Okay, that's the view. You can consider an investment in Swiggy with a long term perspective. Hope that answers your query. There is a query that's come in from Vishal. Wants to know your thoughts on Reliance Industries, if it's a good time to accumulate for the long term. The stock is perched near its 52-week highs. Good time, Ajit, for the long term?
Yes, so almost over a year now that we are about to cross the record highs levels. It's a very gradual grinding recovery. So yes, after retesting closer to the record high zone, we may see some profit taking a consolidation. So around 1500, 1520 is the zone, means 30-40 points down from the current area is where one can look for accumulation. In fact, one can look for partial buying even at current levels and add more in case we see a correction towards 1500 mark. Up, the more important aspect is to hold the major swing lows close to around 1350 mark to maintain this medium to long term uptrend. So yes, if the view is 3 to 6 months at least, then you can definitely look to accumulate the stock at current levels.
Okay, that's about Reliance Industries. Just a disclaimer, Network 18 is a part of Reliance Group. So if you are making any investments, please consult with your financial advisor as well. But of course, just about one or two more queries to go because we are running out of time. Just saw a query, I'm not getting the person's name. Indian Overseas Bank, 60 rupees, hold 10,000 stocks. Should I hold or exit? Very quickly, what should be done here, Ajit?
It's an underperforming name, Nanta. So there's no point staying put, and especially after almost 50% kind of a retracement that he has already experienced, and while the other PSU banks are making a new record highs. So the time is he can consider switching this to Bank of Baroda, SBI, Canara Bank, or other private banking majors like HDFC or ICICI.
Okay, stick to the large caps. That's the view. Okay, then just about two more queries to go. One query from Alex, JSW Infra. What is the best support level for long-term investment? No fireworks. If you look at the last 5 days, it's been flattish. Last 1 month, you've seen negative returns. Any thoughts on JSW Infrastructure?
So yeah, after the failed breakout attempt, we are seeing this correction unfolding from last 3 months, and this might continue. Means closer around 260 to 50 is a zone. If the view is long term, is a very good zone to start accumulating. In fact, if you have any existing position, you can continue to look for buying opportunities on dip around 250 mark.
Okay, that's the view. And last query, I think it's on HBL Engineering from Shweta Naidu. She wants to know whether she should hold on or shift to CG Power. Any thoughts here? Shweta wants to, she's in fact bought the shares recently. She wants to know if there's any momentum expected here or should she straight away switch to CG Power?
So momentum, I doubt because after this phenomenal surge from 550 to 1100, the stock is experiencing profit taking for almost a month now, and probably around 830-35 area is something where we have the immediate base. So consolidation is more likely, or in fact, we may see further profit taking. So refrain from aggressive long if you have existing position. 830 should be your stop loss. CG Power is also experiencing a similar kind of a trend, means the stock is experiencing profit taking and the support comes around 650 mark. So in case if you wish to switch, wait for a dip towards 650 in CG Power also to accumulate fresh.
All right, that's the view. With that, we've come to the end of the query segment. If we couldn't take up your queries, please keep them coming in. We'll try and get them addressed tomorrow. But Ajit, with that, would like to thank you for taking out time and joining in this morning. Always a pleasure, and I look forward to our next interaction as well. Wish you, a good rest of the week going forward. Let's hope that we could reclaim those all-time highs. In fact, even race past that 25,325 mark or 26,325 mark on the index.
Thank you, Nanta. Thank you, and same to you. Take care. Bye.
Thanks a lot. All right, with that, let's shift focus to what the market is really doing at the current juncture. We're down 63 points, but the good part is that the mid-cap index is holding in the green, even though it holds for us because it's expiry, so there will be a fair bit of volatility as well. But I'll see you then at 3 p.m. with closing bell. Don't forget to tune in for that. But till then, you guys stay tuned to Money Control and have a great day. Thanks a lot for tuning in.